Hello and welcome guys. My name is Martin Jones and as you can see from the branding behind me, I am here at the London School of Business and Finance. And as you can see on my chest, I love AAT. It is true, I do love AAT. I blushed to speak when I first started teaching AAT 1,000 years ago when there were dinosaurs wandering London, and it is my pleasure to present to you on AAT. Now, what I'm doing here in this studio is level 3, and I think what I want to do is just go mini-me and show you what I'm going to present. Here it is over my shoulder. It's an exercise on level 3 on the financial accounting preparations exercise, and it's got some ratio analysis stuff that we're going to do together with each other. And should we go for it, guys? Off we go. Here we go. You are a trainee accountant technician who prepares final accounts for a number of sole trader clients. Show whether the following is true or false. So, gross sales margin percentage may be calculated as follows. Gross sales margin, gross profit margin is the more common name, isn't it? But that is an acceptable way of recognizing the gross sales margin. So it is true. And I'll give it a nice big tick. True. Lovely. Moving on. Now that you have that expression, gross sales margin is equivalent to gross profit margin, and it's the gross profit on the sales. The next question asks us to have a play with the numbers, and the examiner's comments in this area were that students struggled a little bit to play. So I'm hoping that I will be able to convey to you the playful nature that the examining team were looking for when it came to playing with this number. To a certain extent, it's a little mathematical, this. This exercise is asking us to take an equation and play with it, which is sales margin, as they express it here. Gross sales margin is an acceptable expression. Gross profit margin, GPM, is the normal expression that's used for this thing. So gross sales margin, gross profit margin, GPM, is equal to gross profit over sales. So there's 3 terms in this equation. I'll write it that way, actually. So the classic way of communicating what you can see just over my shoulder. Just a second. I need to adjust the functionality of this tool. Is GPM is equal to the gross profit over the sales. And one way of interpreting this ratio is as a mathematical expression. So it's one of those classic things that you often do in maths, which is given 2 of the 3 terms, what's the third one? What's the missing figure? And that is the playful nature that the examining team were looking for in this level 3 exercise as we work our way through. So should we have a look and see how it goes? You have the following information about a business for its year ended 31st of March 2007. It's not registered for VAT. Now that's really, really handy for our purposes because VAT isn't enormously difficult, is it? But it certainly makes seeing the flow of the numbers quite a challenge. I was speaking to the camera in Studio 1 over there and talking about the way that sales are recorded when you have to record the VAT. And even such a simple thing as recording a single sale is complicated by VAT. Thank goodness there's no VAT, so that really helps us. The trader operates with a gross sales margin of 25%, which means that of its sales, 25% is profit. So there's a couple of different ways of saying this, but the easiest way of saying it is, say I sell to you at £1, then of that £1, 25 pence is profit to me. Now, this is not visible to you. You just see a sales price of £1, you owe me £1, you pay me £1. But when I take that pound from you, essentially what I do is I pay 75 pence to my suppliers and I keep the other 25 pence for myself. That's the idea of gross profit margin, gross sales margin. Just making sure we've got the idea of a broad range of suppliers. Of course, when I refer to suppliers here, we're talking about the full range of suppliers. The suppliers of goods, the suppliers of labour as well. All the suppliers. But even after I've paid off all my suppliers, I still get to keep 25 pence, which is a lot, isn't it? So that's the idea there. Then we've got a figure for inventory, a figure for the sales, and a figure for the purchases. And we have a little play with the formula and see where it takes us. So using this information, complete the following tasks. Calculate the cost of goods sold for the year. So, we'll just say that again. So if I sell to you at £1, then 25 pence of that is profit, so 75 pence of it is costs. So the proportion of my sale price, that is costs, is 75p in the pound. You may have got that immediately, but I'm talking to a camera and the camera's looking at me confused and unblanking. So say it again. I will. Here we go. Sell for £1, 25p is profit, therefore 75p is costs. So the proportion of costs in the sales is actually 75%. Going back to this, there's really only one important figure for us in this context, and that is the sales figure. The sales figure is 64,900, and of that, 25% is profit and therefore 75% is costs. And that's it. So I'll use a nice curly arrowhead here and say 75% of 64,900 is going to go in that box there. And I have my iPhone on the desk as my calculator walking with me, and off I go. Now, I would be interested to hear if there is anyone joining me here for financial accounts for level 3. That would be very nice to hear. So is anyone there with me, joining me for financial accounts preparation level 3? That'd be nice to know. And then, of course, what I'll do is I'll pick up my calculator and off I go. By the way, if you're watching this as a recorded product, welcome. Of course, it's absolutely fine. Honestly, welcome. But it can be nice to have someone behind the camera live. So 64,900 multiplied by 0.75 equals 48,675. There we go. Just check I've got the figure right. So 0.25 times by 64,900 minus 48,675. Absolutely lovely. 48,675. Fantastic. Lovely. Calculate the value of the closing inventory. I tell you what I'd like to do. Yes, what I need to do with you over this 26-minute recording is I need to answer question B1, B2 and 3 and 4 over the page. And it's more than enough time, 26 minutes together. So I think what I'd like to do is to immediately start to reinforce the importance of the website to you as a learning tool. Now, just to be on the safe side, you know, with copyright and things like that, it's probably best if I don't disappear off to the AAT website and actually flash it up in front of you. You never know, it might cause some of the software to go wrong, and you know how software fights with each other. We don't want any of that kind of craziness. But what I would like to do is just to show you what you have available to you on the website, because I've got it on my keyring down here, you see. So on my keyring, I have some good stuff that I really recommend to you. Now we're doing FAPR, and what I had open just a second ago, actually, I just closed it down, is the examiner's report. Now isn't that a wonderful document that you have available for you? This is the examiner's report going through all of the financial accounts preparation exercise that is available on the website. Now the way to get in and to get hold of this examiner's report is to go into your this is hard to say, go into your My AAT, and when you get into it, track down the simulations, and it's in the 2016 AVQ 2016, and in there you will find the simulation, and you will also find the simulation that I'm doing with you, find the one that Reg is doing with you as well, and find the answers and find the examiner's report. Now, the reason that I'm able to tell you that students struggled with this particular exercise is it tells me in this examiner's report. And also I have in the same website, of course, also in the same website we have the examiner's answer. There we go. Just give me a second. There you go. Isn't that really lovely? So you could do task 1. There we go. And can you see there is the answers that I'm working with you. It's really nice, isn't it? So there's the ratio. Is it true that gross profit margin and gross sales margin are the same thing, is what it says here. And there's the figure. Ooh, don't look at the figure for the closing stock, because I'm going to work that with you. But I just thought I'd mention that to you so that you know what is available to you on the website. So this has been taken from the website, from the AAT website. When I say this, I mean, oh, sorry, wrong one. What I mean is, give me a second. This. Oh no. There's too many things open. Is that my highlighting? Goodness me. I'm not having much luck, am I? There we go. Sorry guys, too many documents open. I think I better close a couple of these. No, I better not. Someone might want it. So here we go over here. What we're working our way through is this exercise here, and this exercise has been taken from the AAT website, and on the AAT website it's got simulations, and the simulations are just really wonderful. I really recommend you do them. So what I'm teaching you here is the answer to a question, but what you can learn from doing the simulation is not just the answer to the question, but the way that the CBE examination works. I guess if it's your second or your seventh examination, you're very familiar with the drop-down menus and how to fill out numbers on the platform. And when you come to do your CBE, you'll be nice and relaxed because it's your second or indeed your seventh examination. But if this is the first time that you're sitting a CBE examination, it can be really wonderful to sit one in your home environment and relax with it. So I do really recommend that you explore your My AAT and get into the AVQ simulations and have a little go at that as well. Back to this. So this is a real exam question from 2016. It's a real exam question from 2016 that the AAT are now using as an example, as a simulation on their website. So what is it talking about? It's talking about playing with numbers. It's talking about gross profit margin. Gross profit margin, as you can see, is the gross profit over sales. And if you know the gross profit over sales, you also know the costs over sales. And we want to know the costs over sales because that's the question. So if 25% of the sales is profit, 75% of the sales is costs. But how is the costs made up? How do we calculate the costs? Now, I think the way that I'm going to do this is I'm going to give you an extra line at the bottom here. I'm feeling like there's not enough space there for my comfort. So I'm going to take you right down to the bottom where I've got a little bit of extra space, and I'm going to give you this formula. So it's often written like this. Let's write it in an accounting presentation. So cost of sales in an accounting presentation is often, oh, make sure I don't go right off the screen there. I'm getting a bit exaggerated in my position on the screen. Just let me move it up a little bit. There we go. Cost of sales is often described as the opening stock, opening inventory, plus the purchases, minus the closing inventory. So we add those numbers and deduct the last one, and the figure coming out at the bottom is the cost of sales. There it is the cost of sales. Oh, I'll put in a couple of kisses there. There we go. And the examiner is asking for one of these figures, but before I show you how to rearrange the formula, I'll just make sure you've got the logic of the formula, because it's not just a bunch of numbers, it is trying to describe something. The cost of sales is literal, it's the cost of what you sold. Should we go for a nice easy year end and indeed year start? Should we start in January and end in December for our little example where I talk this through? The first thing you sell in January is the opening stock that you brought forward from December. So the first thing you sell is your opening inventory. Then you run out of your opening inventory, you have to buy some more stuff and then you sell it, and then you buy some stuff and then you sell it, and you buy some stuff and then you sell it. But you buy some stuff in December and you don't sell it, it's still on the shelves. So if you haven't sold it, it's not part of cost of sales. And that's the idea. So in terms of months in a calendar year, January, the opening inventory is sold in January. December, the closing inventory is purchased in December but is not sold till the following January. And that's the idea of this formula, shall we say. So rearranging that now into a formula and perhaps using some abbreviations so it's just a little easier to write. So cost of sales is equal to opening inventory plus purchases minus closing inventory. All right. And I would feel best if I rearranged the formula. So taking this over the other side, closing inventory is equal to opening plus purchases minus cost of sales is how that works. Sorry, what were we being asked for all that time ago? Calculate the value of the closing inventory. So the closing inventory is equal to, oh, now I need the rest of the information. I drop it in, don't I? So what do I have? I've got the cost of sales. So what's that? 48,675. So 48,675 minus purchases 48,390. Is that right? 48,390, and the inventory is 5050. There we go. And I'll get my calculator. Okay, so rather sadly, Wish, who was with me live earlier, has departed this session. And there's no one watching me live. But never mind, you're watching this as a recorded product. I'm happy to see you. Welcome. Excuse me, my phone is fighting with me. Doesn't want to recognise my thumb. Oh, that was fine. Plus 5050 plus 48,390 equals 4765. There we go. So the closing stock is 4765. And you might feel most comfortable if I then put this information into the classic presentation. I think I'll do that for you. So the closing stock is 4765. There we go, stick it in a sausage. The opening stock, which we sold first, is 5050. And of course, we sold most of the purchases apart from the purchases at the year end, which ended up in closing stock. So that's 48,390. And now I'm working forwards to reaffirm the cost of sales. So 5050 plus 48,390 minus 4765 equals 48,675, of course. There we go. But the question wasn't asking for the cost of sales. We have that already. The question was asking for, can you see it? Yes, you can. This baby here at the bottom. There we go. The 4765. 4765. And I'll be a good boy and I'll type that in. Oh yeah, I don't know why I didn't type the earlier one in. Maybe I'll correct that now. Starting to regret that straight away because I had the figure there. There it is in my face. So the reason I want to do this is Wish, who was with us earlier, asked me the very reasonable question: how do I communicate when I am in the real exam? Well, as I say, the really nice way to find out how you communicate in the real exam is to go to your AAT and do the simulation. But let me tell you, there are two ways of communicating. Basically, you type in numbers or you draw a drop-down menu down and select from it. That is most of the way that you communicate when doing the financial accounting papers. It's not entirely true about everything, but most of it, most of the answers are done by dragging down a menu and selecting from a menu. When you're communicating words, and when it's numbers, you type. So let me type. Make sure I don't use any numbers over there. So 48,675. Whoops, that's giving some away. 486. Is that coming out? Yeah, it's a bit small, isn't it? But never mind. 48675. How are we doing for time? Yep. And what was the other number? 4765. So I'll pop that in there. 4765. And part of the reason that's looking so small is because I'm on mini scale. That looks a lot better now. It's a bit bigger. There we go. So calculate the cost of goods sold for the year, calculate the value of the closing inventory. And I have sympathy with the students in 2016 who struggled with this, and therefore it's particularly this bit, it's not so much the rest of the question. So I'm less concerned about the rest of the question, and I'm more concerned about reinforcing what we've just learned here. What I'd really like you to do is to have a look again at what I have here. I'll change the scale again so you can see the whole thing. What I have here in terms of the playfulness that the examiner was expecting. So I think I do want to say it again, actually, the idea of the way cost of sales works. So the examiner can give you, he can start you with the sales, get you to work out the cost of sales by using the margin, and then once you've got the cost of sales, get you to play with the component parts of cost of sales. But what is cost of sales? Cost of sales is the cost of what you sell. And what did we sell first? January. What did we keep at the end? December. And the purchases are sitting in the middle. And that's how the flow flows with the sausages up there. But the equation can be written like this. And the ability to play with this equation does seem to be important to the examining team. So I do suggest you have a little play with this and make sure that you're comfortable. I'm going to go big me now and wish you good luck with your examinations. Very good luck with all of your examinations. This is financial accounting preparation, of course, level 3. And, you know, I wish you particularly good luck with this subject, obviously, as it's mine. But I wish you very good luck with all of your AAT. Well done for choosing AAT. Well done for choosing the London School of Business and Finance. And I hope to see you soon for another live recording. See you soon.